Hi guys, this is Irfan here from smartyincubator.com and welcome to another video. In today's video, I want to show you a breakdown of the trade that literally happened this morning on GBPUSD and EURUSD. I want to show you exactly why it happens and what happened exactly. That's going to be a really interesting one. Today is Wednesday, March 2nd. Oh, I'm very behind. And then we took a trade on GBPUSD. That was a really clean one when it woke up at 8 in the morning Eastern time. The trade literally happened 10-15 minutes after that. But before we jump into our trade, let me show you what Goldie Incubator did in the last 24 hours, which is going to blow your mind. So this is our test account, as you are aware that these are the trades that it literally took. I'm opening a real account as soon as possible, like in the, probably next week, but you know, it doesn't matter, it's just the same performance, but I'm going to do that. And March 2nd, as you can see, these are the trades that it took, which is absolutely mind-blowing for March 2nd. So you can literally see everything here yourself. You see that we are $2,337 in profit, and in total is $2,800, and you can watch the live results yourself. I'm going to leave a link down in the description below, so you can see yourself that what's exactly happening on Goldie Incubator, how much profit we're making, how much the percentage of our gain is. Everything is exactly right here. Feel free to check it out. I'm going to leave a link below in the description, and then you see everything yourself. And if you want to grab your license, by the way, you can give it a try for 7 days for free. Yes, you heard it right. And after that, if you think that, you know, it's profitable for you and you like it, then you can move forward. Otherwise, you know, you didn't lose anything. Just try it on a demo account, see how it works for 7 days, and then after that you decide what to do. So you can grab your license from smartyincubator.com. Again, the link is in the description below. Okay, so let's get into GBPUSD. I want to do a little bit of replay for you and show you how you could easily use a smart money concepts trading a strategy to trade this beautiful setup. So for GBPUSD, I'm on a 5-minute time frame, as you can see, and we had a huge drop last night, and then after that the market tried to create higher highs and higher lows. So as you can see, these are higher highs and higher lows. So it means that the market is trying to reach this level, or I would say the middle of the trend, to fill in all these gaps that are left over. But after that, you see that we had a huge drop after that. So see, if I want to use this trend line, you see that we have a huge break of a structure, and then it started creating lower lows and lower highs, and after that again we started creating higher highs and higher lows. So this is exactly when I woke up and, you know, check out the market, and it was really choppy. There's so many weeks. Said, oh my, what's going to happen exactly? I had no idea what's going to happen. I was checking out a 15-minute time frame, and then I noticed that it's really going to probably break this structure here. This resistance level is a really strong one. We have so much liquidity here. Sellers enter the market here, and now it's the time to stop them out, especially after seeing this bullish engulfing candle that formed right here. So, but if you go to 5-minute time frame and you use your rectangle tool, we can literally see that we have a high probability order block right here. Why is it a high probability order block? Just because of this. Because of these two candles, we can see a high probability order block, because after this huge candle here, we had this gap. So it's not like, it's a little more advanced. So the regular definition of high probability order block is that when you have a bullish engulfing candle or a bearish engulfing candle, and then the candle after that leaves a gap in between. So between, let's say that this candle opened here instead of here, there's a gap between this candle and this zone here, then it makes it a high probability order block. But I knew that something is going to happen, especially after I saw this momentum right here. I knew that it's going to get respected. So even if you didn't want to grab these two red candles, you can use this red candle right here and see that it literally tapped into this zone as well. It's very interesting. See this one, it literally tapped into this zone, and we had this momentum right here. So what you could do is that you could enter your buy position here, since you have higher highs and higher lows, you're trading according to the trend, and put your stop loss underneath this zone here and your TP right here. So it's a 1-to-1 risk reward ratio trade, which is absolutely amazing. So as you can see, we had another momentum right here, and then after that it just blasted through our TP. Very, very easy, but you know, it's going to scare you. I know it's going to scare you, especially right here when you see this momentum and it's actually getting close to your stop loss. But if you really believe in your strategy and you know that high probability order blocks work 80% of the time, then you don't make the mistake of you know, closing your trade manually or moving your stop loss to break even too early, because I've done all of it. Like, I'm not saying that I'm not doing it anymore, because sometimes I get emotional too. So it's very, very natural. But if you really work on yourself and you be disciplined about your strategy and you don't move your stop loss, it's gonna be amazing. I want to show you one more example on EURUSD that what happened. It was a very, very interesting one, that even if you didn't move your stop loss to break even, you could have, you know, had a very, very profitable trade. So this is a really good example that I want to show you. And yeah, that was for GBPUSD. You could, if you wanted to take one trade. Otherwise, you know, you could have waited for this high probability order block that just formed after this huge drop. See, after this, sorry, huge spike, there's a gap in between. So this is a high probability order block. So you can wait for the price to tap into this level, and then yeah. So this is an interesting one. This is a 5-minute time frame. This is a high probability order block in 5-minute time frame. But if you switch it to 15-minute time frame, you will see that this is actually going to start from here. See, huge spike, and then the price tapped into this zone. If I go to 5 minutes again, you see that we have this momentum here, and it literally shot up. It was a really interesting one. So if you wanted to kind of combine and correlate 15-minute time frame, 5-minute time frame, you could have got this trade here, which was a really, really interesting one. So that's why I play with 5 minutes and 15 minutes to take my sniper entry. And if I wanted to do that, I could take my trade here, close it here, my stop loss here. That would be awesome. But you know, if you put your stop loss underneath this candle, you actually broke the rule, because it was supposed to be here. And if you want to take a one-to-one trade, you gotta wait up to here. But if it's going to tap or not, we don't know. We'll see. It doesn't. See, it stops you out and it doesn't go above this level. So that's the thing. So if you want to take a 15-minute time frame order block, then you need to widen your stop loss, or you just could put your stop loss here, your TP right here. It could be a one-to-one trade very beautifully, but you know, it's going to be exactly the opposite of what I said, that the stop loss should be underneath or above the order block, outside of this box, like whatever you want to put it, outside of this box. Otherwise, you know, you just need to take a risk, put it underneath the candle, and then you take your trade. But here it was a beautiful trade. We put our stop loss underneath the order block. It never got tapped into, like we never, our stop loss never got triggered, and then here we are. And right here we are forming a head and shoulder pattern. See this head and shoulder pattern, and that's why it was kind of creating this momentum, and boom, it drew up significantly. So if you see this pattern, then you'll notice that your order block right here won't probably work, because head and shoulder pattern is way more stronger, and you could have literally take your trade from here all the way to here, right here, 1-to-1, 1-to-2 risk reward ratio. Yeah, that was for GBPUSD, guys. Pay attention to candles, pay attention to patterns, pay attention to trend, then you become profitable. I can guarantee that. So let's go to EURUSD to show you something very, very interesting exactly at the same time. So I'm going to do a replay at 8 o'clock, that when I woke up, and then I saw this momentum. So unlike GBPUSD, that, you know, we had a bullish trend, we actually took a long position. For GBPUSD, for EURUSD, if you wanted to do such a thing, you need to draw your rectangle from here to here, and then you see that there's going to be a gap in between, but there's no gap. So we'll see, you know, if it's the same thing as GBPUSD or not. But as you can see, it just literally broke below this box, which makes it invalid. So this is not a high probability order block anymore, and plus we have a break of a structure here. So see, this is a break of a structure, and when you have a break of a structure, you need to use your Fibonacci level. And you see, let's say that you don't take this trade, and then the market just drops significantly, and then we right here we have a break of a structure after this candle. So what you can do two things. Whether you use your high probability order block to take a sell position because you have a break of a structure towards downside, or you use your Fibonacci level from the latest point. So after this huge not huge, like after this break of a structure, I can draw my Fibonacci from, like, because we had a, see, we had a drop here, and then the price went up, and another drop, and the price went up, and another drop. So we started from the closest one, which is right here. So if I use my Fibonacci level from here to here, then you'll actually from from here, because the break of a structure happened from the top and then it dropped. Sorry, my bad. It wasn't from here, it was from the top all the way to the bottom where the correction is starting. And then you notice that this candle is already respecting the golden zone, which is between 50% and 60% level. So you can take your sell position here, or you can put your stop loss, your sell stop below this candle, and then your stop loss right here and your TP right here, and see what happens. Crazy, right? And then another break of a structure. So this is the highest point, this is the lowest point. Again, one more time, draw your Fibonacci level from here to here. You see that the golden zone is getting respected, and then another momentum here. Oh, sorry, not this one. Yeah, this one. Another momentum here is getting respected. This is a really good candle for selling the market, and then another one. See, it's very easy, guys. When you notice that the market is trying to change its direction and is creating lower lows and lower highs like this, then you need to change your bias, and then you sell a market. If it gets stopped out right here, for example right here, then you shouldn't be like, you know, frustrated or say, okay, it doesn't work, or the blocks don't work. No, just change your bias. It's 80% accuracy, it's not 100%. So there is always that 20% chance that it gets stopped out. I need to wait for more confirmation to change the direction of the market, right? So again, the same thing is happening from the highest to the lowest, but this time it's respecting the 70% level, not the golden zone, 70% level. And we probably have a few rejections here, and then the price is finally dropping. See, it's very crazy. You could have taken your trade here, and we could have taken two trades, one from here to here, and one you could leave it on it all the way to here, which literally smashed your TP. 1 to 3 risk reward ratio. So let me show you here. If you take your trade here, put your stop loss here. As I said, don't move your stop loss. See this candle here? It really scares you. I know that, because it's a very strong bullish engulfing candle, and you say, oh my god, it's tapping into my stop loss. But no, look at this. Look at the huge drop after that. It's all about believing in your strategy and not moving your stop loss to break even too early, or don't close your trade manually. I've made this mistake so many times, like so many times. So you could have closed it here, almost 1 to 60, and then the second one right here, which is almost 1 to 4 risk reward ratio if you wanted to actually hold it that much. And here we are. We have the liquidity grab, and then the market is going towards upside, which is absolutely mind-blowing. So guys, that's it for this video. I hope you got some value from it, and you know, you had a profitable day. By the way, if you want to grab your license for Gold Incubator and you don't want to trade manually yourself, you don't want to analyze the market, you don't want to have, you know, too much headache waking up in the early morning, have a profitable day and have a loser day, then Gold Incubator is the best option that you can have, because it literally does everything for you, and you don't have to analyze the market. It's not a signal, it's not an indicator that shows you everything and then you enter the trade. No, it does everything itself, and you just need to sit back and count your profits. That's all you need to do. And you know what to do. If you have any question, don't hesitate to drop your comments below this video, and I'll personally get back to you. So thank you so much again for watching this video, and see you on the other side.